Namaste. Clause 44, Form 3CD under Income Tax Act, newly introduced. Columns consisting of the intention of this particular column is breakup of total expenditure of entities registered or not registered under GST. So they want to capture some data, breakup of total expenditure of entities registered or not registered under GST. There are 7 columns. First one is total amount of expenditure incurred during the year. Again, another 3 divisions, expenditure relating to goods or services of exempt from GST, expenditure relating to entities falling under composition scheme, registered under composition, and expenditure relating to other registered entities, that is other than composition and all other registered entities. Then total payment to registered entities. So column 3, 4, 5, total payment to registered entities. And the last one is expenditure relating to entities not registered, unregistered. So column 3, 4, 5, 6, 7 equal to column to total amount of expenditure. This I got from the guidance note on Tax Act under Section 44AB of the Income Tax Act Assessment Year 2023 issued by the Institute of Chartered Accountants of India. The first thing is, according to them, total expenditure means one should not divide headwise, nature-wise, expenditure details not envisaged under this head. So, as per the word total expenditure, it denotes that headwise, nature-wise expenditure details not envisaged in this class. Next, depreciation and bad debts need not be reported. Schedule 3 of GST Act. Goods or services prescribed or described under Schedule 3 of the CGST Act need not be reported. For example, services in relation to employment, that is employee to employer, services provided by employee to the employer. This will fall under Schedule 3. So, expenditure pertaining to salaries or remuneration need not be reported. This is the another interesting aspect. The services by an employee to the employer in the course or in relation to his employment, and thus remuneration to employee need not be reported. This is the interesting point from the guidance note from institute. And next one is expenditure wholly incurred wholly or partly wholly or exclusively for business or profession purpose. So payee, the conduct or character of the payee is not very important whether he is registered or not, but that expenditure incurred wholly and exclusively for business or profession of the assessee qualifies for deduction under the registration or otherwise of the payee under GST Act has no relevance. So this is another important. Registration of the other end recipient is not the important criteria for reporting this turnover. So entire expenditure, if it wholly or exclusively for business or professional purpose, must be reported. Next, expenditure relating to goods or services from exempt from the GST. For this, they referred some notifications. Among them, important is 2/2017 central tax rate for goods and 12/2017 central rate for supply of interstate supply of services. These two notifications are very important. Before going to report, please refer 2/2017 and 12/2017 for goods and services respectively. Next, exempt supply includes non-taxable supply, which includes petroleum products and liquor, supply of liquor and supply of petroleum, crude, high-speed diesel oil, etc., etc. This is another important. Next, expenditure relating to entities falling under composition. So, for composition dealers, the note suggested to verify while reporting the expenditure under the said the following should be considered. So, he cannot charge, the composition dealer cannot charge GST in the invoice. The composition dealer cannot make interstate supply, and the composition dealer must supply, must issue bill of supply, but not tax invoice. He must issue only bill of supply but not the tax invoice. And another caution from the guidance note is it is a normal practice of the taxpayer or small taxpayer or medium taxpayer not to mention the GST of the transactions pertaining to blocked grade, that is under section 17 subsection 5 of the GST Act, are purchased from the composition dealer. So in that area, one should take care. This should be taken care and included in the report. So while verifying with the blocked grades and purchase from the unregistered dealers, generally the small and normal dealers need not maintain or may not maintain the details of the GSTIN of the said suppliers. So this area must be taken care. And next, expenditure relating to other registered entities is furnished in column 5. So exempt supplies are over, composition registered supplies are over, then remaining other registered dealers. So expenditure relating to other registered entities must be furnished in column 5. This is other than exempt and composition. Next, subheading 6. Some of the values reported in 3, 4, 5 should be uh, reported. So subheading 6 for some of the values reported in 3, 4, 5. Total of the 3, 4, 5 belongs to 6. Column 7 expenditure relating to entities not registered. Earlier we have discussed registered dealers and now column 7 for the unregistered dealers. Expenditure relating to entities not registered under GST. So what are the expenditure? It should be reported in column 7. Next important issue is capital expenditure should also be reported. Total expenditure includes capital expenditure. This also should be reported. These are the important points from the guidance note issued by the ICAI. This is my understanding and understanding of NTRF. Kindly go through the guidance note and frame your own opinion and report the class 44 of 3CD accordingly. Namaste.